This week, Donald Trump dropped a bombshell announcing plans for a US Bitcoin reserve. But here's the catch, he's promising to do it without spending a single dollar of taxpayer money. So, how's that even possible? Let's break it down. The US government is already quietly holding Bitcoin. Billions were seized from criminal investigations. Think like ransomware attacks, dark web marketplaces, and cyber scams. Historically, the government auctioned these confiscated Bitcoin to the public, but now they're going to hold it and build a reserve. But that's only step one. How else could America realistically acquire Bitcoin without tapping into your taxes? Bitcoin mining using excess energy. Well, look at Iran. They mined nearly $1 billion worth of Bitcoin using energy resources they already had. America could follow suit, utilizing wasted energy from oil fields, natural gas flaring, or renewable energy surpluses. Essentially, converting unused resources directly into digital assets. Strategic crypto bonds, or take inspiration from El Salvador. Their government raised $1 billion from investors with Bitcoin-backed bonds. The US government could issue similar bonds to investors specifically to fund Bitcoin purchases. No tax dollars spent, just investors betting alongside America on Bitcoin's future. Here's another creative option: asset swaps. America holds over 8,000 tons of gold, valued at outdated prices from decades ago. If the US revalued its gold to today's market prices, it could generate billions in surplus accounting value. Then reinvest that directly into Bitcoin without ever asking taxpayers for a dime. Fines paid in Bitcoin. What about fines and penalties? Regulators like the SEC often issue hefty penalties. Imagine those fines being payable directly in Bitcoin by corporations facing enforcement action. The government collects Bitcoin directly, further building its crypto treasury. Tariffs and international trade revenue. And then there's trade, particularly tariffs. The US brings in billions annually from tariffs on imports, especially from China. Some economists suggest channeling a piece of these revenues directly into Bitcoin. It's controversial, but practically speaking, it means foreign trade is funding America's Bitcoin stockpile, not your taxes. And here's why this matters and why you should care. A strategic Bitcoin reserve could drastically reshape America's financial future. Think of Bitcoin as digital gold, limited in supply, global in value. If the US builds a significant position, it gains strategic leverage in international finance, similar to its gold or petroleum reserves. It could also stabilize Bitcoin's market, reassuring investors and positioning the United States at the forefront of the global crypto economy. And crucially, because they're avoiding taxpayer funds, the risk and burden stays off the public's shoulders. But the path isn't without risk. Bitcoin is famously volatile. What happens if the market crashes? Would the government face backlash or financial instability? And would Congress ever approve it? Yet, despite these hurdles, the idea of America holding Bitcoin officially signals a new era. A nation, not just investors, betting on digital assets for long-term wealth. Whether you're pro-crypto or skeptical, this could change the game forever.